Hey, hi everyone. Welcome to another video. So today we are going to go through the list of leading indicators in trading and financial markets, and we'll go through the details of all these leading indicators and their performance and accuracy, and some specific examples of these leading indicators performance. So most of the indicators are lagging indicators and retain themselves also, but there are a few indicators which are leading indicators. So leading indicators basically give you leading signals, or what we can call as predictive or prior signals to you to trade, which indicate that this is going to happen. So that's what a leading indicator is. Lying indicator is basically tells you after the thing has happened. That's what those lagging indicators are. Yeah, so we'll go through the leading indicators for today. So RSI is the first leading indicator, and it's a momentum oscillator. So we have three types of main things that when it comes to indicators that we need to look for. One is the trend indicators, moving averages, and all those super trend. Everything falls into these trend indicators. Momentum indicators, relative. This RSI is a momentum indicator, and we have volatility indicators also. Volatility is Bollinger Band. These are volatility indicators. So these are the most important indicators and categories of indicators basically. And yeah, so RSI is a leading indicator, and it's a momentum oscillator ranging from 0 to 100, typically overbought. So when RSI becomes above 70, it's considered as overbought, and when RSI becomes below 30, it's considered as oversold. And yeah, the performance of using RSI in backtesting suggests that it only has 40 to 50% win rate. But if you incorporate or use it near support and resistance zone, then the accuracy improves for RSI. Examples of RSI using is intraday reveals on Nifty and Forex, so that RSI dips below 30, then it crosses back above. So, whenever RSI is below 30 on Nifty and Forex, it will bounce back from there. So that's the example, and it's a leading indicator. Stochastic oscillator and Williams percentage are, these are also leading indicators. So what these stochastic oscillators and Williams percentage are? So these compare closing price to recent range with levels at 80-20 stochastic, or minus 20 minus 80 percentage are for overbought and oversold signals. Yeah. So what is the performance of these indicators? Is trades based on stochastic can yield up to 40 to 48 percent accuracy is there for these stochastic indicator. Although false signals tend to spike in trending markets. Okay. Examples where we can use stochastic oscillator and Williams percentage are swing traders catch reversals when stochastic percentage D crosses percentage D near extremes, and filtering with moving averages. Okay. So stochastic oscillator and Williams percentage are also leading indicators, and yeah, 80 in stochastic is considered overbought and 20 is considered oversold. Similarly, Williams percentage are also minus 20 is overbought and minus 80 is oversold. 40 to 48% accuracy is there, and swing traders use it to catch reversals, and percentage K crosses percentage D, and they use moving averages also along with it. On balance volume and volume price trend. So these are volume based indicators. So other than momentum, trend, and volatility, we have volume indicators also. So this is one base on balance volume and volume price trend, or volume based leading indicators. So on base volume, this reveals accumulation and distribution. So as per price action, there is the price generally has accumulation, then it goes up, and then distribution and goes down. So that's the price action theory. And this on balance volume will reveal accumulation and distribution for you. Volume price trend adds price change scaling to it. Performance of these indicators is accumulation before price breakout offers early signals. Okay, so yeah, that's when you use in a longer time frame, that definitely offers early signals and widely used by commodity traders. So it's used by commodity traders a lot. This on balance value, volume and volume price trend indicators. Hedge funds detect divergence using these indicators. So price flat, but OBV is rising. So this is the trend they look for. Divergence they look for. Price is flat in the chart, but OBV is rising. Then they enter into a long position before breakout. So this is divergence acting as a leading indicator, and OBV divergence with the price. And in this case, price is flat, but OBV is rising. So they enter into a long position before breakout. Commodity traders use this on balance value and volume price trend a lot. Then we have commodity channel index. So this measures deviation from moving average scale to plus and minus 100. So backtest over 20 years on S&P 500 shows 1,108% returns versus 555% buy and hold using CCI 50 crossing minus 100. So this indicator is working excellently well on S&P 500. It's a leading indicator. It got around 1,108% returns over 20 years. Swing setups triggered when CCA crosses plus or minus 100 combined with trend filters. So that's where it can be used. Okay. So this is a very good indicator in that case. Okay, so very good leading indicator because the returns are very good and it measures a deviation from moving average basically. Yeah. Pivot points. So pivot points are also leading indicators, and they are derived from prior, day, prior day or week or month high, low, and close. That they are used to anticipate intraday support and resistance. Performance of pivot points is they are highly reliable, and many traders watch them and use them. 50 to 60% win rate is there in intraday strategies using pivot points. Scalpers use pivot and S1 and R1 levels in Nifty futures for quick reversals. Okay. And Cabrilla pivots, you can use S3 and R3 also for trading reversals. Scalpers use these pivot points a lot, and win ratio is around 60%. This works across time frames. That's a good thing about pivot points. That's the leading indicator. Awesome oscillator. So this measures short-term versus long-term single simple moving average momentum and effective divergence signals in trading markets prone to whipsaws when markets are choppy. So when markets are choppy, none of the indicators work. But yeah, when markets are trending, the divergence signals are good in this case. In the case of awesome oscillator, intraday trend shifts are detected when AO crosses crosses zero line and then flips from green to red bars. Okay, so this is used to identify the trend shifts. And when this also oscillator crosses zero line, then and yeah, so a trend shift can be identified in intraday. Then we have vortex indicator. So this tracks what is the vortex indicator? It tracks positive and negative trend momentum. So VI plus crossing above VI minus signals uptrend. And performance of these vortex indicators, it outperforms ADX and DMI in many futures. ADX is also a momentum indicator, and yeah, and this vortex indicator outperforms the ADX in many futures markets, but has mixed results on small cap stocks. This is used by institutional futures traders to confirm breakout setups. So these indicators are being used by institutional traders. Okay, vortex indicator, commodity channel indicator, pivot points are used by scalpers a lot, and hedge funds use on balance volume and volume price trend. Swing traders use stochastic calculator, and these are all leading indicators, which is the best thing. Okay. MACD divergence, histogram divergence. When we're talking about divergence here, so MACD histogram flips or divergence can precede turn in price. The MACD divergence can predict basically the turn in price. Performance is less than 50% win rate, but it improves with when you add it with RSI and MFI filters. Yeah. Example, hedge funds so use this MACD divergence plus momentum filter on mean reversion stock signals. So this is with these they can predict that the basically mean reversion will happen in a particular stock. But they'll combine this MACD divergence with momentum filters also like RSI or MFI. So you can understand, right? Institutional traders or institutions are using these indicators because these are leading indicators. So that's what provides an edge for you when you use indicators instead of lagging indicators. Average directional index. So this is a trend strength. It will tell you DMI line signal direction. Performance is the signals only strong trends used to avoid false breakouts and specifics mixed. So the strength of the trend can be found through average directional index. Swing traders only enter trend when ADX is greater than 25. Help time entries accurately. So this is one of the trading strategy. ADX greater than 20 or 25 is used by swing traders to enter into a trade, or even intraday traders to enter into a trade. So performance summary: most leading indicators hover around 40 to 50% win rate individually, but MACD plus RSI MFI combo improved both win rate and profitability. CCI 50 backtest on SAP has yielded better results than buy and hold by 2x over 20 years. Pivot points and Fibonacci are reliable due to crowd usage and often reaching 50 to 60% accuracy. Okay. The best practices are leading indicators work best. Indicators work best with confirmation filters like motion and volume, and use multi time frame alignment. So you take a signal on higher time frame and do the execution on shorter time frame. Always apply risk management, stop loss beyond confirmed levels, positive risk reward, and small position sizing when taking the trades. Final takeaways are leading indicators like RSI, stochastic, OBV, CCI, pivot points, AO, VI, MACD divergence, and ADX help anticipate turning points and early trend shifts. They're used alone. They have 40 to 50% accuracy, but systematically combined with other tools and risk controls, they can provide some higher accurate or reliable trading signals across intraday swing and positional strategies, and even in hedge fund models. So that's the leading indicators for you guys today. Thanks everyone for joining the call. Have a nice day. Bye.